All right, everyone, welcome back for the episode of Carnivore Trades. Today is Wednesday, August 14th, 2024. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com. We're swing trading alerts, analysis, and live day trading. Anyways, let's get into it today. So, markets here pretty quiet. We did have a little rally this morning, and it kind of got faded back a little bit. Spider's up just $1.50 on just 30.6 million shares. So very light volume. And yeah, we have about 10 minutes to the close here. And it's a CPI day. So we have a really muted session here on CPI. Now, perhaps it got priced in yesterday with that big move or leaked. But I mean, it was pretty much in line with expectations. So we didn't really have much of a surprise in either direction. You can see here, little up, down, all around. We tested the low, spiked the low, false breakdown right there, and then rallied up. And we've just been basing since then, so nothing really doing. There is a trend line I'm watching here on ES, and we're kind of coming into that now. And if we look, I think there's a little bit clearer here on SPX. You can see if we just draw right to there, you know, it basically got there. But what I'm really concerned with is that 618. So we talked about that yesterday, and we did hit it. And we're backing off, but we're not rejecting, right? We're not getting hit hard on heavy volume, right? So bears are not showing up here. That's obviously a point for bulls. The volume is a point for bulls here, and just the carelessness is a point for bulls. It's the market's going up kind of, not that it was bad news, but it's the yield curves. Bonds are starting to continue up. You can see the ZN there and ZT. All right, so yield curve starting to unwind again a little bit, although it's, well, not so much today, but, there's still that kind of that weakness, economic weakness that is in play, and bulls are going up on that. So that's a positive. The negative here is, if you'll remember, I talked about this extensively, but as a bull last week, I was rooting for us to be down on Wednesday. Everybody got bearish here, and I said this is actually more bullish. And we've gone up 5 days in a row since then. We're up 350 points off the lows, and we have hit the 618 now. We've got this trend line here. We got the 50 MA. We also have the Qs here back testing this trend line. The reason why I said specifically on Wednesday is because we're looking for that AAII number tomorrow. And to me, I think that there's personally, we're not really out of the risk window yet, from the work I've done. We're also, if I can get my chart to come up here. So there we go. Sorry about that. Yeah, so you're going to see last week, or the week before rather, we had a lot of bulls, not a lot of bears. They upticked big time after that panic sell, but the bulls didn't really downtick a lot. Right, so that is kind of my worry, is that we're going up a little bit too fast and we have not pulled back. I mean, this day here is not a pullback. You did not really, you haven't broken trend here. So look at the steepness of this 4-hour move. So I would think that here there could be a little bit of risk for a pullback. I'm just in kind of mostly neutral right now. I don't have a huge bias one way or the other. I need to see how this next week or so plays out. We are into a big resistance zone. And you can see here on the ES, the 618 is a little bit higher because we have that pre-market data. It's a little bit higher than the SPX. We haven't hit it technically, but measuring in right with that trend line there. And you can see the QQQ back testing this blue trend line with the 50% fib. And again, we're not rejecting. So that's the positive here. But the risk I see here is that if bears get squeezed out of this market too quickly, that's where a lot of risk can come in historically. So historically, the best bear moves come after a big bull move like this one. You get the bears out of the market. That's where that air pocket comes in, and there's nothing to stop it if it comes down. So I'm still pretty neutral right now. And I still have my base bull case here. I'm still giving the trend the upside bias, deferring to the trend. We never broke trend on the weekly. You did gap below the weekly 20 MA, but we never closed below it. So again, no real problems here from a big picture standpoint, but and hey, maybe it's just we need to pull back for a few days, maybe pull back into this zone here, the 5300, 5325. And then you could easily put in a higher low. There's plenty of room for higher lows. But right now, I would just advise being neutral. Don't get too bullish here. Don't get too bearish either. And again, just watch how this level plays out. So far, the bulls are doing, they're pretty much having an uncontested rally. We're V-shaping, but starting to look like it's a little too quick, too fast. So we'll see what we get here. Max move, I think, from what I calculated on SPY is about 550, so we could even peak above that trend line. That is not a price target, it's just a max move, and that's going to be right around 550 SPX. We do have jobless claims tomorrow, and the market right now is more concerned with jobs than it is inflation. And you can see that the muted action this morning, right? We saw that on ES. Didn't really care, but last week that was the big catalyst on Thursday, right? Jobless claims. So jobs data is more important than inflation right now, and the market is looking at that. Again, we'll see if these levels end up being resistance. Again, I'm still in the camp that I don't think even if the bull move is in, we at least have to, go sideways here for a few days. There's just a lot of supply up here. But either way, good move here for bulls, and we'll see what we get tomorrow. Next week is the big one with Jackson Hole. And yeah, we'll see how the market trades into that. But right now, just advise a little bit of caution here, and again, don't get too carried away on either side here. I still think there is some risk in this market, and again, if you kill all the bears too quickly, that's where you can get those air pockets. So just be aware of that. Overall, the market's holding up. Triple Qs here again into the trend line. Again, just a lot of resistance here. It might need to go sideways even into the end of the week or something. 450 is your first support on the downside. IWM still on the weaker side. It tried to break up today with a gap up. You kind of have that it's not really a bull flag. Let me just look at the RTY. Yeah, it looks better. It's better on the RTY. That's more of a bull flag there on the RTY. But couldn't hold the gains today, and it's coming back in. So again, still kind of soft there. Got close to that 2150 level and couldn't hold on. So you can see that kind of coincides with that 210 level on the IWM, and that's still acting as resistance right now. The DIA managed to get above 400. There is GEX there for Friday, just so you guys know. So that may be a pin going into Friday, and that obviously aligns with Dow 40K, which we are above right now. But market's holding up here. SMH here up 34 cents. Again, back testing a trend line, big level. SOX, same kind of deal. Actually negative today. IGV, pretty strong though. And I'm very impressed with IGV and how it was able to just get right through that level. So again, I'm starting to see those things here, that kind of careless, like, who cares about the data, just buy, that type of thing. Usually you see that in bull markets. We are under the 618 now, and we did back off of it. But pretty good price action so far. I just want to see us get through these next couple of days here, though. Dow Transport's here up 11 basis points. Nothing terrible there. Up move. Possible bull flag, zigzag. Maybe 15.6, 15.7. So markets close in a minute here. But rates fractionally higher on the short end. So 2-year trying to put in a higher low. It did back test 410. If it can put in a higher low, it can go back up and start to break back up to 420, 440. Those are kind of bigger price targets. It's going to be hard for that. The Fed's probably going to indicate they're going to cut next Friday. At least that's what the market is trying to price in right now. You can see fives, same look there. Got to get back above 375, and then you can go to 395. 10's fractionally lower, but again, there is room for higher lows here. So I'm not ready to call yields dead yet. And personally, I think the market's offsides here. I think the market's really, this is just my opinion. Don't take a trade off of this, but I think that, I think too many people are short yields and long bonds. I just think the market's over, the expectations are really high for bonds right now and for economic data to be weak. But we'll see. So there's room for higher lows. We'll see if we get them. XHB again, hammering on 110 again. Still not above it, but back above. This can squeeze up a little bit, probably back up to that gap. VNQ continues to be the champion of the market. 24-cent gain today. Not huge, but it's just consolidating above all the moving averages. And I like that you go up into the 200, so you can tell it was weak before, right? We made the low here, the bear market low. We went up to the 200 and it just, couldn't hold on, right? It just had too much resistance there. But now you've got higher lows, right? And you're coming back up here again. You tested it there. And now what are you doing? Are you rejecting? No, you're not rejecting. You're just flagging. So it's just pounding on that 200 moving average over and over. It may take a little bit of time. It might need to do a little bit more. The 20 MA start to catch up, but that's not bad. It's not bad for VNQ, and it continues to be strong. This was the whopping sell. That's all it did on last Monday. So this is still a strong sector here. Which is funny because everybody's talking about recession, and here's real estate acting just fine. And even home builders with that daily chart breakdown, it's not, they're what, like 10% off the highs, still above the weekly 20. So not the end of the world here yet. XLF had a good day, up 1 1/4 into the gap now, might pull back there. KRE was definitely weaker, so down 12 cents. That helped pull the Russell down. But pattern-wise, it's still not bad, right? So up move and you're kind of sideways, so we could zigzag back up into the gap there. And KBE, same thing. I remember RTY got a better look there, so than the IWM and the cash. Broker dealer is another big day. Broker dealers never cares. Just buy every dip ever, I guess. Look at this. Broker dealer is just out of control here. Even on the monthly, look at that monthly candle. By the way, look at the monthly candle on SPX. Pretty wild. All right, oil here holding up. So that's 77 right now. It backed off pretty good. Kind of needs to hold right here. You do have a higher high now, so that's the positive. If you can get a higher low, they can start to reverse the trend a little bit, at least in the short term. I don't know what to make out of it. You have weakening data, but you also have geopolitical stuff going on, so it's kind of in a range here. I don't see anything great for it. I don't see anything that bad either, though. And again, I'm still neutral on this. But you do have a higher high, so that's your positive. XLE started off pretty weak, but came back nicely and finished up 52 cents. Got to get through this 90 handle, and then, you can start to rally back up towards 92. XOP, a good rally back. That may need to, there's obviously a lot of resistance right here. Might need to have a higher low in there to get there. But good rally back. OIH still soft. So OIH can't get out of its own way. The one thing that could be a positive, though, is if this can break up, you could leave an island down there. So that would be your positive, but it's gotta actually do it, though. And so far, nothing doing there. CCJ, again, still looking for that to retest 42. NM, same thing, up to 43.50, maybe 44. Nat gas still acting well. I think this is put in a seasonal low, meaning we'll probably trade up into like November. That doesn't mean it's going to go up in a straight line, but I think the lows are probably in for now. 2.3 and then 2.4 are your resistance. You want to see it hold above this line here, above that moving average for now. But this can consolidate that little bottom. It can have another pop. So nat gas holding up. Dollar index. Again, higher low dip and a higher low setup. Still got a lot of work to do, and the trend is starting to turn down on the DXY daily. The weekly, also in a little bit of trouble. And the monthly is still fine, but you got a lot of work to do. You want to see a reclaim of 103.88 by the end of the month. Otherwise, the dollar is in trouble. Gold, on the other hand, is doing the opposite. Feels like it makes a new all-time high pretty much every day, but it never closes up there. But chart's looking okay, and I don't see any problems. Not overbought. not extended, and it's just trending higher. GDX had a good day yesterday, but down a little bit today. SIL down 17 cents. Got to get back through that 31.50 area. Silver futures down 20 cents. Got to get back above 28. But I still like this pullback pattern here in silver. And then we've got platinum here. A little disappointing, rejecting at that 20 and 200 MA. So they could get this bear flag to set up here on platinum. Down 1.5 today. So be careful with that there. Then you have palladium, which is much stronger, but it was down $4 today. And we've got copper still hanging in there. Tested the 20 MA and pulled back just a little bit. I like the falling wedge though. I'm looking for this to firm up here. Again, I think this is really crowded too. So everybody expecting recession, and that the problem is when you get it, if everybody's already in that trade, yeah, that's why people get so confused and so angry when their trade doesn't work out. Like, oh, you know, the jobs data fell off a cliff and why are bond yields going up? Because everybody was already in it, right? So positioning matters. But Bitcoin down, so not participating with stocks, but chart pattern's good. I just wish you were above the moving averages with that consolidation. But outside of that, no changes. If we break back above 63, it's in better shape. So simple. Again, so market's closing at 54.55. There was a pin there really all day. Yeah, I mean, we backed off of the 618. Let's go to this. Yeah, we backed off the 618. We'll see what we get tomorrow. I wouldn't rule out a little bit more of a pullback or something of that nature, but markets are holding up. I think 55 to 550 is max move for this week if we even get up there. They may try to, there's some calls sitting up there, so they might burn those out. They did obviously roast puts in the first half of the week, as we've seen. So maybe they'll mean revert it tomorrow. But again, volume light. They're hitting volatility pretty hard. So vol sellers back in control. That's my only kind of issue, though, is there's two sides to that. If things get too complacent too quickly, it can open a little bit of danger here. VVIX back below 110 for the first close in a while. That's a big positive for bulls here. So I want to see more of that, but I'd like to see this kind of pattern develop a little bit more on the indices before really calling the all clear here. And this is coming from the guy who has been mega bullish for a while here. So just so you guys know. But anyways, guys, I'm going to wrap it up here. You guys take care. Don't forget to come find me on carnivoretrades.com, and I will see you guys all tomorrow.